Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Pederson. So today I have Vadim Kleyner with Smartland with me. So Vadim and I, we've sort of been crossing paths for several years here, and recently Smartland has joined the Verivest Sponsor Network. So my day job is at Verivest, and they've recently joined us, and they've got a lot of exciting things going on over at Smartland. So I thought I'd have Vadim on and sort of talk shop, and I'll let him sort of introduce himself, But Vadim's been at this for quite some time now and done a lot of stuff on the single family side and got into the multifamily side. They've expanded down to Florida, originally sort of from, Ohio and, really in the thick of things. So Vadim, why don't you kind of share us, your origin story and kind of where you're started in business and why you decided to get into real estate and, what really led to you forming, making the leap and forming Smartland back in the day.
Well, Lance, first of all, thank you for having me on your show. We do have quite a few years that we've been in contact. I guess there's a point where we got to the point where we understood that we need somebody outside to help us navigate the actual financial structure of funds. And I'm very glad that you guys have the solution. About me, I've spent first part of my life in IT, and generally my core is IT. That's what I love. That's what I understand. That's what just comes naturally for me. And being an operator of a company is also, I guess, it's in my blood. So I had IT companies, quite a few of them, and when I exited my last IT company in 2007, I wanted to take a year off and just spend with my family, but I can't be completely off. So I figured that I'm gonna buy real estate, first piece of real estate in my life, and I will keep myself busy to some extent. And that's I bought my first house in January of 2008, and by June 2008, I've acquired about 100 houses.
Jeez.
So there goes my free time or my year off, and this is how I got into real estate. I was very pleasantly surprised that IT was not heavily embedded in real estate world that I came from. Was 50 years away from where real estate was, and I just thought that using my knowledge, I have definitely a leg up before anyone else, and I stayed here for 12 years now. 12 years up in real estate, and we've started with single family homes, as I mentioned, and we've moved on to multifamily apartments, 100 unit plus, and we expand, like you said, from Ohio to now additional territory, which is South Florida.
Yeah, that's great because that's where we're the commonality. So I was my first company was IT services, virtual IT stuff. I think, is that what you guys were doing too? Are you doing software development, or what was your IT?
Infrastructure. We did infrastructure development.
Okay, got it. Yeah, so you did all that, and I also sold my business in 2007. So a lot of similarities. We both. My first day at Fairway America was January 1st, 2008. So right as you were buying your first house. So lot of parallels there, and we've since that time lots of crazy stuff has definitely happened in the real estate business. And as you said, it's been nice to see that tech is finally, that was the thing I noticed right away too, was that when I got into it, I'm like, oh my gosh, like Stone Age stuff, like just there's no technology use, like they're not doing anything with tech. And now to see, it's finally sort of catching up, and people are, prop tech's a thing, and there's venture capitals or all these things that are happening, software is being integrated, which is just kind of neat because it's good to see as sort of this like final frontier that was untapped. No one was really leveraging technology in the real estate business. So for you guys, I'm curious, I mean, because I have a hunch here that, to acquire that many single family homes, especially at that time, 2008, I mean, the market was still decent. I mean, that's when it's, really the whole crisis sort of kicked in. So were you leveraging tech at that point to like mine and scrape RMLS, or, how did you get that many acquisitions done in such a short period of time?
No, actually the time was bad.
Yeah.
As I always say, I was very, very fortunate not to understand that this was a bad time. Yeah. I wouldn't come to real estate, but I didn't know that the time is bad, and I went in it, and apparently it was the best time to start. But banks were unloading properties. Mm-hmm. They were just unloading off their books, and most of the properties we've bought were off market. As we started buying on market, whatever we found on MLS, but as banks realized that they're a cash buyer on the other side, and we started having direct communications with banks, and we were able to buy in small, small bulks of properties, sometimes 4, sometimes 17 properties, but we were able to buy them from banks direct. Not to say MLS was not but with the great deals.
Yeah,
MLS was also
yeah. So you were already taken. Yeah, so that's when there was distress already occurring even at that time, and you guys were.
It was a lot of distress. It was just, I remember when I drove on the streets in 2008. It just it did look like a war zone on many of the streets. Yeah. So it did look bad in 2008.
And this is in Cleveland mainly, right?
Cleveland proper.
Cleveland proper. Okay.
Right. So it's a metropolitan area of Cleveland, about 2.5 million people.
Yeah. And then one of the things that you've done at Smartland, sort of, I think from day one, and it makes sense from your roots, is just really big on sort of vertical integration, right? Like, so you guys have built the business in a way where you do the construction and the rehabs and right? I mean, you've got brokerage. Maybe share a little bit with us, like why you decided to do that kind of early on. I mean, it seems that a lot of people, try to avoid doing that. I mean, at the end, when they get big enough, they kind of make the jump, but it seems like you kind of were keen to doing that from the get-go.
Sure. Well, first of all, I don't know if it's all our planning or just market way was the way it was, and we're just lucky to end up in the situation. But our structure was, after we bought a house for very, very, I saw it's very cheap. Mm-hmm. I couldn't comprehend that the only way to sell the house, I had to put it on MLS. Remember, I came from the world that we were connecting the world. Yeah. We were selling to China, or connecting China buyers with sellers in states, and just about. I mean, the infrastructure was very complex compared to, hey, the only way out is to put it on MLS in local Cleveland market. Mm-hmm. But no, there's internet exists, and there's Google AdWords, and there's a million ways of showing other people that there's you can buy relatively cheap real estate in other parts of the world, and that's what we did. We built a site and we started advertising, and people from all over the world, Australia. I remember 2008, 2009. It was Australia. Just they came to buy by buses. We had bus tours for Australian buyers, and we started selling all over the world. After someone did buy a house, they understood a house would have to be renovated, and in order for it to be investment property, there wouldn't be any other way for to exit for them. So they understood that they would need to renovate. And whether I liked it or not, whether I wanted it or not, I needed to figure out how to renovate the property I found a guy that I knew for a long time, that I knew he's in renovation business, and I knew he's just one of the better ones in it.
Mhm.
And I asked him to come on board and help us renovate these houses. We started renovating them, and so this became a division of our company. And then once they were renovated, we were asked to find tenants, but there was no management infrastructure for single-family homes as exists now. For example, in 2008, it wasn't.
Yeah.
We
Yeah.
were the only, or maybe the second, real single-family home property management company in Cleveland. So to be that, we had to open, we had to find the software, we had to figure out the solution. So that's what we did. We built another arm to support our clients, and thereafter we have three divisions: renovation and acquisition and management for our clients. And this is exactly how we became vertically integrated. And in 2015, we exited our management company, which was at the moment the biggest management company in Cleveland with single-family homes. And we exited.
So you ended up selling the single family property management division.
Correct.
Got it.
When we were selling it, as we learned business more and more, and it became more apparent that multifamily type of real estate has almost same issue as single family does, but a lot of people address them correctly in single family world, but just about nobody addresses them in multifamily. And what I mean by that is, if you see let's call it flippers, they buy property that's in a pretty bad condition, and they make it, they put $30,000-$50,000 in it. They make it look great. They make it work great. They're just making a great property. And that's the formula that everyone understands. So this formula did not really exist in multifamily, or let's say Northeast Ohio, this formula did not exist.
Yeah.
So when we understood that there's about 80,000 units that were built in 1950s, and they still look like they were built in 1950s, and there's nobody renovating them and bringing them back to 2020 look. Mm-hmm. That's when we understand that there is a niche that we can attack, and this is how we sold our single family property management division and moved to multifamily.
Got it. And then, do you guys still have? Because I think I've seen some of the ads around. Do you still have like the turnkey rental? Is that still a component on the acquisition side and the reno side, or?
We still have it. Yeah. It's something that comes so naturally now, doing it for so many years. So we still have small percentage of houses that we still pick up. We just understand them. There's sometimes banks calling us and asking us to buy properties for cash from them. So we do still have small percentage of our business derived from single family homes.
Yeah. So really the shift then became more of taking you had the acquisition side, you had the, sort of the renovation side or the construction side, and basically pointed that at really the value add multifamily opportunity in 2015. So it's basically parlay that. And then did you guys end up, as you guys acquired multifamily buildings, then you did the in-house? I mean, the management's obviously a bit different. So you kind of sold the single family portfolio and that business, and then, but you still sort of retain some of those key people, like to do the property management, or would you hire like third-party property managers? No.
One thing that's very, very apparent and important, and that's, if you would ask me, what's the single most important component of our business? Mm-hmm. It is property management.
Okay.
You can have the best property in the world. You can have the best renovation team in the world. You can have whatever, but if you don't have a tenant, and if your tenant is not happy, and if your tenant does not feel like he is a part of a solid structure, you will not have a tenant. And the most important, the biggest expense you have is your vacancy. Mm-hmm. So property management is the most component we have, and that's the one that I personally oversee and have my hands in just about every department within property management, as this is the most important component. So we did not hire a third-party company, and this is our strength, is property management.
Yeah. So what do you think that other, multifamily owners or do that? I mean, it seems like a lot of them buy them and they hire some other third-party property. Maybe you can kind of get more into the details as to the big difference. Like you're kind of alluding to it, I think, is just saying vacancy is the killer, right? I think I can probably go on a limb and say, that if you guys control it, your ability to foster a culture amongst the community, that multifamily, that they feel like they want to be a part of this, they want to live here, and that they're being taken care of. But once again, it's easy to say out loud, fostering that and making that a reality. How do you, especially across so many different projects and things like that? I mean, what are the little things you guys do inside Smartland to ensure that people realize, like, we're serious about this? We want our residents and tenants taken care of, and the culture piece of it that's easy to gloss over. But I think that you guys have that's my take, is just from the outside looking in, like it's infectious inside your company, the people that are on the property management side, hence you run it. But maybe just give us a little more insight into how you do that, and people selection, and
Sure.
Why you're so passionate about it, like why you would never hire a third-party property manager.
Sure. So one thing, we have a meeting. We have, besides short, small daily meetings, we have a weekly meeting for property management. And every meeting, if it not starts, but somewhere in the middle of the meeting, there's always a statement. We are Hilton. And this is our mindset. We are Hilton. When someone does not know how to take care of the problem, how to fix the problem, how to deal with certain tenant, there's a very simple way of doing it. What would Hilton do? If you're at Hilton, if you're at front desk, and you're asking for whatever it is, you have an issue that you address, how would it be addressed? So this is our core statement. This is what we're trying to be on the one side, and on the other side, we are very amenity oriented. I mean, when I'm saying amenity oriented, a lot of people have amenities, but we go above and beyond that.
Mm-hmm.
We try to build amenities for people that will be hard to replace moving from our apartments anywhere else, unless they move somewhere to Class A apartments in downtown to $2.80 a square foot, which is double the rent that we're asking. So building environment for tenants that is hard to replicate, I think brings way longer tenancy than we ever anticipated. And I think these two components is us approaching tenants as we're Hilton again, and given an environment which cannot be replaced anywhere else.
Yeah, no, I love it, because you're basically saying we're a hospitality firm. Your employees are continually and constantly reminded that we're in the hospitality business. I mean, if you say if we are Hilton, yeah, you are. See, that's what I mean. But you ask, and it's funny, right? Because that's not what, I mean, how many multifamily guys have I had on this show, and how many do I talk to in any given week or month or whatever? I'm telling you, man, that's not how most people look at it. They don't think that they're in the hospitality business, right? And I think that, to your point, it's vacancy's the killer. So if I can keep the units occupied and the tenant stays longer, costs go down, profit goes up, right? I mean, bottom line. So it's and then the amenities. So maybe share with us, because I think some of the amenities that you're speaking of are things that you're not talking about, sparkling pools and waterfalls, and it's very practical and pragmatic things that I think often are overlooked. Maybe share with us some of the things that you guys do that maybe others, it never dawns on them that they should offer those things.
Sure. So some of the amenities, see, when you said practical, they're just practical. They're not something outside of this world. They're not. Um, uh, I can't find the word, but being practical is that's what surprises me is other operators don't have. Why wouldn't they have it? It's practical. It's
Yeah.
and the one thing that I always bring into conversation is smart home, smart home, uh, not a plan, but um, smart home devices within our apartments. It's been a while now since smart home been out.
Yeah.
Right. At least
Yeah.
I probably had it 8 years ago. I had my first Alexa. I had my first smart thermostat with smart lights, smart switches. At this point, these components are so inexpensive that it costs $200 to put them in. They're all Wi-Fi driven. There's really nothing to. It doesn't take much to install them and to bring tenant into. I can't say it's 2021, but at least 2015. Now this apartment feels like 2015. You can speak through your voice, or you can speak through Alexa. You can turn the light on. Yes, it sounds cool. It shouldn't sound cool in 2021. We're flying to Mars. We're we have rovers at Mars. So this is not a cool. This is not a really cool thing that you can define, but it is, I guess, makes us different, and it makes our apartments different than others. So that would be one component.
Mm-hmm.
When people move into our apartments, they have whole sound, a whole house audio with Alexas and with the lights that are turning on, and things that they're operated from their phone. Also, we built EV stations with our apartments. I know some people do it, and it's more customary in Florida. In Cleveland, per se, we were the only one when we started building EV stations, and a lot of people asked, why are we doing it if there are not a lot of EV vehicles? But unless we build them, people that drive vehicles will not be in our apartments. So we took that leap of faith, I guess, and we started building them. Then little did we know the way that it became a profit center, because if you have an EV station, EV companies, they actually have a network with an app. And if anyone with EV vehicle drives by and tries to find anywhere to charge their vehicle, all of a sudden our apartments show up on their apps, which became, we didn't know that this is going to happen. I guess we got lucky again. So little things like this. High-end renovations is another thing. We really, if you look at the pictures and examples of our renovations, we really make high-end renovations, and that's another amenity that we know keeps people in. It's just hard to move from something that looks like it was built in 2021 to, again, something that looks like it was built in 1950s.
Yeah.
Well, I think we're holding on to our tenants pretty strong.
Yeah, I agree. Yeah, and I know it's being a tech guy too. Those things just seem, and that's just it. That's with being in tech. You always have to be. Everything's changing all the time. The technology every day, it's just getting better and better and better. And so when you're used to that, then you see, like you said, like Alexa's been out for how long now, and all this sort of stuff is just, for tech guys like you and I, it just seems like it's been around for forever. In reality, in the grand scheme of things, not really, but just by being a little ahead of the curve, even like the EV charging stations. It's just it. If everyone's all up, like, Tesla is awesome and, whatever. That wasn't just yesterday or the year before that. Like, that's been going on since 2015. Yeah, that's right. So it's just like it was coming, and it was right there in front of us. So, adding those things. The other thing that I think is really practical and pragmatic is that you guys will often like provision a dog park in, like a dog park inside of some of your communities, which right? Once again, people love dogs. Like that's another thing, but you don't see that often, where people would, like an owner would even think that maybe an amenity we should have is like just provision a little dog park and, in one part of the green space, right? So like, how did you come up with that? Were tenants asking for that, or what's that?
Oh, absolutely. We build dog parks, but our dog parks they look like playgrounds for dogs, not just a patch of grass.
Yeah, yeah, exactly.
A lot of people, or a lot of other apartments have dog park per se. This is what they call it. There's a little patch of grass. There's a station where they can clean up after their dogs. No, we build playgrounds for dogs.
Yeah.
Just the same size or even larger than sometimes playgrounds for kids. And also, we know for those that love dogs and pets. I have a pet, so I understand what the love for a pet is. It goes beyond explanation.
Yeah.
So for those that have pets, this is such an important thing. It's as important as for those that have kids and they want kids playgrounds. So it's important. It's also important for parents.
That's right. And that's, I think, in multifamily, like you said, this is where people live. It's their lives. They're humans. Like it's just and this is the thing with multifamily, that's different than, industrial or retail or whatever, is that these people, they're consumers, right? So the consumer trends are important. All the things we just spoke about, those are consumer trends. So if you're in the multifamily business, you're in the consumer business, right? And then for you guys, that's why I just think that it's just a shift, right? And looking at it that way is hey, but we're really okay. It's a consumer business. We got it, but we've got customers. The customers are the tenants. We want them to stay. We're in the hospitality business. Let's make sure that people feel taken care of. All those things create retention. So it all sounds great and whatever, but. And once again, this is the real estate risk report, but make no mistake, everything we just talked about, those are risk mitigation strategies, right? The risk is that someone moves, sees an apartment for $20 more a month that has better amenities and they move out after their 12 months. Now you got to turn the thing over. You got to go pay a leasing commission, advertising costs go up, right? Whatever. And the whole, even how people treat their units, if they feel like they're part of a community and they have respect for those who own it and provide the ability to live there, they're going to, whereas if you're a jerk and you're absent, you're not there and, you're treated like, like you're criminals or something, they're going to beat the place up. Right. I mean, and like but those are things that often get kind of overlooked. Right. So as a passive investor, these are the things you really want to dig into when you're thinking about, of course, it's shiny pictures that you see and these, great returns or whatever. I mean, obviously that's what they want. They want to invest money and then get some, above average risk adjusted return. But to figure out whether or not the return that you may get is above risk adjusted, a good risk adjusted return, you really need to dig into who's running the joint. Right? Like who's going to execute the business plan? What are they going to do? How are they going to do it? How are they going to take that 1950s building or 60s or 70s or 80s and, go about making the transformation? And what is it going to look like? And how are they going to convince people to pay, an extra $150 a month or whatever the business plan states, right? I mean, that's really the same way that Vadim and his team look at it is the same way that a passive investor needs to look at it. Right. Except for, you guys do all the hard work and the diligence and, that sort of stuff. But if someone doesn't have those components, if they're going to do a deep value add and add, a bunch of money per door, that means that there better be a construction guy or there better be some people on the team that actually know how to do that part of it. Right.
Execution is, and that's what I always, I tell my kids, we have a lot of time to have this conversation. Where they have a great idea. They always have great ideas. Mm-hmm. And unfortunately, they're young enough where I can find that as an excuse. But they always say, well, I have a great idea, and they tell me the idea. And then we would look back at their ideas in a couple of months, couple of years, and say, why didn't you do this idea? They'll but it comes down to execution. Everyone has great ideas.
Yeah.
I've never spoken to a guy or girl that they would give me bad ideas. Everyone has great ideas all the time, and in the middle of conversation, when somebody finds out that I'm very techy or I have engineering mind, I have this idea and I have this idea. What do you think about this idea? Everyone has great ideas. It's all about execution.
All about execution. Yeah, I agree. It's making it happen is hard. It's always hard. There's always resistance. I mean, if it's going to cause change of anything, human behavior, moving walls, bringing in grant, whatever it is, resistance will be met. And, you need people that know how to execute. Right. And so and that's why it is a team sport. Ultimately, it's just, there's different parts of the business as we've sort of laid out here. I mean, you've got, who found the deal, negotiated the deal, bought it right. Who's then, doing the value add, the construction and turning it around, who's managing the day to day to make sure that the tenants during that time don't all freak out and, leave and, all of that sort of stuff. It's a team game. And so you've got to look at the organization to see how they run their business. Right. And that's, I mean, for me, it's like, you've got weekly meetings, you got things, you're saying things like, we are Hilton, right? Don't forget about it. Those sort of, mantras and things like that. So it's good stuff. I like talking about it because it's easy to say, well, we've got a great culture and we've done some great things, but it's like, but what does that mean? Right? Like, what does that look like? How does it feel? So kind of migrating, I know that you made the move down to Florida yourself, which is, for obvious reasons, it's warmer in Florida than it is in Cleveland.
Special day.
But really, let's talk about markets for a bit. I know that you guys are now, doing some investing, obviously in Florida as well. Maybe share a little bit with us kind of what the state of the multifamily market is right now in Florida. What your strategy is in particular, what you guys are looking to do. And I know you got big plans. So then I think it's still, you're doing obviously active in Ohio and things as well, but.
Of course. So Florida, as in Ohio, in today's market, percentage of offers versus percentage of deals that we have analyzed went drastically down. So not to say there are no deals in the market, 10 times more research and analyzing to make an offer.
Mm-hmm.
Same goes right now in Ohio, same in Florida. So this is the state of the market. It's very the prices are up. There's no questions about it. And due to influx of people into Florida market, as well as in Ohio. Ohio actually has a huge influx of population right now. People are pulling back from Chicago and New York. And, they left their nests, and now they're coming back. You can work remotely from anywhere. Yes. So Ohio surprisingly has a big influx of population right now. So is Florida. So influx of population into Florida, coupled with low interest rates. Just prices are very high up, but we set out to find deals, and we are finding deals that are matching our criteria, where we can do our renovations. We can bring units that are built in 1950s exactly the same way as they were built in Ohio. They were built in Florida, 1950s, and we. With adding amenities and doing our renovations, we're able to increase rents and therefore return investors money and make profit and just be very active in this area. However, there's one very apparent difference between Ohio and the Florida market is Florida ground up development in Florida. It is a lot closer to viability than in Ohio. Price per square foot that you can build or renovate in Florida are very close. In Ohio, they're so far apart that it's hard to put your mind into building ground up in Ohio. Not to say that there is not new construction going on, but it is really the difference between what you can buy and what you can build is very much big difference. So in Florida, we are looking into ground up construction.
Got it. Yeah. So if it pencils and you can, that you're not opposed to going ground up if it pencils out. Yeah. I mean, I've heard that. I think that same thing is happening a bit in the Texas markets. Obviously, it's just given where it's at, and the dynamics at play, it's starting to make sense to. I mean, right now we've got lumber prices are obviously like through the roof as we speak. But those things, we'll see where that goes. But it's definitely an interesting time, like you said. It's just it's difficult to transact, especially if you're a disciplined investor, right? And I think that's the other piece of it is, having, and maybe you can share a bit about kind of what you and your team does, but I think that you guys put a lot of effort and focus into the acquisition side as well, just building pipeline, and bringing those things in, but just being able to you really to make, you're going to have to look at a lot of stuff, and and then hopefully you can bring something in and put an offer on it, but it's just tough with the competition that's out there. So for you guys, what does that process look like? I mean, is it building, you've got these broker networks and they bring them in, and do you have like an analyst or two that sort of will, scrub them and do a pro forma, or do you only do pro formas on? Yeah.
Both.
Yeah.
We have relationships with brokers. We have analysts in house. However, I mean, it's not. However, being disciplined, I don't think it's that big of an issue, because you also have you have to have profit. So when you're analyzing the deal, there has to be profit, there has to be income for investor, and unless all those things in the deal, how do you go in it? So I can't imagine that there are other people out there that just close their eyes and say, let's just buy it, see what happens.
Well, I guess I'd like to report that it's not the case, but I'm hearing that there are people doing that, right? Like, so in this environment right now, there's some operator strategies is resorting to, we basically just put an offer on everything, meaning, they're sort of like, if I can win it, we'll figure it out, because, they're just assuming that things will keep going up and to the right. I think these are some of the things that it's just, this is what's so hard about, is that there's certain people like yourselves, like, who have a process. Like, there's just like, this is how we do it. If the numbers don't work, I can't transact. Right. So like, that just means we sit here and wait until something works, whereas there's other guys, and I'm not saying it's the majority, but there's a bunch of other people running around who are just like, offer. Oh, we got one. And then,
but then what? What exactly? That's right. Budget, or when interest rates go up, or
it's going to be bad. I know it's going to be bad, and I think that's the thing. And I've already heard some reports of, people who, did some deals, and, they're not more than 6 months into the deal and they're having to make a capital call. Right. And so I think that for you investors who are listening to this, it's just, that there's usually provision, right? That, hey, we're going to raise this much money. Of course, that assumes it's like, these are the reserves and the CapEx, and right. I mean, and there should be more than enough to, to execute the business plan and whatever. But when they get it wrong, when the operator gets it wrong, when the syndicator gets it wrong, now all of a sudden they're going to need more money, right? And so now, one day in your mailbox, you're getting sort of oh, by the way, I need another, 20 grand. And so that's why it's so important to really do your diligence on the operators, to really understand how they do what they do. I mean, we got into all the stuff about, post-acquisition with Vadim, and now we're sort of on the acquisition side, but that's usually what you'll hear. You want to go all the way, like, how do you source deals? How do you look at them? What's your underwriting criteria? How do you decide whether you're going to make an offer? And all the way down to just make sure that it makes sense. Not everyone doesn't do it the same way. but there has to be a method to the madness, because if there's not, it is just madness.
Well, this is a very, very simple, the simple steps. We look at the rents. That's the first thing that we look at, where the rents are today and where they can be tomorrow.
Mm-hmm.
We're not really stressing much about where rents are today and what is the capex going in, as much as where can we take the rents,
Mm-hmm.
and where can we take the capex once we're done with the renovation. So we will look if there is a delta, if there's enough of delta, and let's say we know that as much of renovation as we put in, we need, let's say for Ohio, about $150 delta, and for Florida, we need at least $250 delta. So if there is a delta on comparables on the rent, this is our first thing that we'll look at. If there is none, we're moving on.
Yep.
If there is, then we take a look at the actual apartments and see if amount of renovations that we can put in it to get to that rent can be paid back in 5 years. And that's just the rule of thumb.
Yep.
And we visit the property at this point, and I guess we're ballparking it, but we've done it so many times that our ballpark is very close to the actual number. And then if these two numbers match, then we know we can make an offer. I mean, it's as simple as that. And if it don't match, then where do we need to make an offer in order for us to be within our capex or with our cap rate? And then we put this number in a spreadsheet, and we have this spreadsheet actually last night until 2:00 in the morning. We were working on spreadsheet and just looking where we need to be. There's quite a bit of negotiations we need to do in Florida market right now. But so we have about 40 listings that we will make offers, and we will present the price that we can pay for.
Mm-hmm.
Well, out of this 40, maybe 2 will reply, and maybe 1 will buy. But we will buy for the price that we can make sense out of it, and we can make profit out of it, and investors can make profit, and it just makes our formula. So this is our process. I believe it's very easy. There's not much, to it. Expenses in Florida account for about between 35 and 40% of your NOI, and in Ohio, you're between 55 and 60% in your NOI. So as long as you know that,
Mm-hmm.
you can make pretty fast decisions on buying it. So I don't think it's a rocket science.
Yeah, that's right. Yeah, and I think
Not flying to Mars.
Yeah, that's right. You got it, and that's what I mean. You view it against things that are far more challenging, but it's interesting. It's still like it's simple, but it's a process, right? And you have a way that you do what you do, and how you make your decisions, and how you and those are the things that I think that for investors, once again, it's not to say, like you said, I mean, you're the guy doing it. It's not rocket science, but those are the things that you need to have assurances of that I mean, one, a track record of success, meaning you've done this before, right? That's always helpful. And then how do you do what you do? Those are important things to sort of dig into and get your mind wrapped around. Understand the sponsor understand the project. Does it make sense to you? If it doesn't make sense to you, then you just have to assume that, like, one, you don't invest in things you don't understand, right? So if you don't understand how they're going to do what they're going to do, and the plan, you don't see how they could somehow magically convince people to pay $300 or $350 more a month in rent, then it probably isn't a good idea, and they're probably inflating their numbers to lure you in, or whatever the case may be. So
so maybe it's just hard for me to fathom that there are operators like this exist. I don't understand why. What would be the reason for them to take this risk, knowing upfront? I mean, right now we're in a pretty questionable environment. We all know that interest rates, or we don't know, but we're assuming that interest rates are going to go up. So let's say you buy something today, it'll take you 2 years to reposition it. In 2 years, you need to do refinancing. If interest rates are up, and you're still working off of 4.5% cap rate, where are you going to land? So
Yeah.
you can't do it. So I can't imagine that there are people that.
Yeah, that's right. Yeah, and it's like anything in life. It's hard to fathom that people would be borderline reckless. But ignorance reigns, and a lot of people are doing things they don't fully understand what could happen in those things. So that's why I like doing this. It's good to pick the brains of the guys who do it. It's kind of like asking Michael Jordan, like, hey, tell me, Michael, how do you shoot a jumper? Right. And he's just like, I don't know, man. Like, I just do this,
That's exactly
that's what I do. I don't know how to explain it. It's not that hard, but yeah, like, well, you make it look pretty damn easy. I guess, yeah, these days, I guess it's Steph Curry. We got to say Steph Curry. How in the world does he do that? But yeah, it's been great. Thanks so much for having you on the show. Why don't you share with people, how can they find you and learn more about what Smartland is up to?
Well, we can find at smartland.com.
Easy.
There's right behind smartland.com. Our offerings on our site. We welcome everyone and anyone that see and understands and believes in our vision. There's also saying in our companies, we see what others don't, and we believe our investors are people that go and invest alongside with us. They also understand our vision. They also understand that where we're going with it. We like to keep our real estate. We don't like to sell real estate. That's part of what we're proposing to investors. So, as Warren Buffett said, the best investment is to invest forever.
Yeah.
We believe in that. We believe in that formula as well. So smartland.com, and Lance, thank you for having me on your show.
No, you're welcome, Vadim. Thanks so much, man. It's great catching up. Take care.
Thank you. Bye-bye.